Welcome, everybody, to the weekend report for January 19th, 2024. Let's just get right into what's been going on this week. We'll start with retail sales for the month of December. The expectation that they would be up 0.2%, pretty much blown away by a 0.8% improvement in retail sales. Not surprising. I kind of expected this. I see the applications I'm getting, what people are putting on credit card debt. I know retail sales are conveyed as a positive that the economy is still strong, but I think as we see in the next couple of weeks, all that debt going to credit cards, not necessarily good. People spending and putting it all on revolving debt, not a good thing if they can't pay it off. So just my opinion though. Mortgage applications, not surprisingly, we're up for purchases 9% and refinances up 11%, as we've seen a couple of weeks past, rates coming down a little bit. This week, not so much. Little bit of a tough week this week, but past weeks have been good. People are hearing the interest rates going down. It has sparked some interest and activity in refinances and in purchases. Now, additional jobless claims reported as well. The initial claims fell 16,000 and continuing fell 26,000. Now, do bear in mind that continuing claims is a 2-week look back. It does include the holiday of New Year's, and these numbers do not make adjustments for holidays. So as we move further into this new year, we continue to hear companies are supposedly laying off, but it's not translating to seeing anything as it relates to unemployment numbers and jobless claims, people filing for unemployment. So a little bit of a disconnect there and don't know what is driving that. Now, we did get existing home sales for December. They were down month over month 1%. Right now, the annualized pace has slowed a little bit. Year over year, we're down 6.2% year over year. And then if we go to median home price, we're coming in at $382,600. Again, down month over month 1.3%, but up 4.4% year over year. So this is good. Remember that appreciation and median home prices are not the same. Even though the median home price fell a little bit month over month, that just means that more homes sold at a lower price point than those at a higher price point. That's all. Because appreciation continues to go up. We see that in the numbers being reported. So don't confuse median home price with appreciation. Now, inventory, we're at 1 million units right now. That is down month over month. It is up a little bit year over year, but again, as interest rates come down, if the inventory is lower, that just creates more demand. If there's more demand than there is supply. So hopefully with interest rates coming down a little bit, maybe that'll spark some interest in sellers to maybe start looking and listing. We'll see. Right now, the days on market ticked up a little bit from 25 days to 29 days, but still most homes are selling in 30 days or less at 50%. And then the collective group of buyers between first-time home buyers, cash buyers, and investments. This isn't much difference. It always kind of oscillates between 2 or 3% plus or minus around these numbers. So nothing unusual about that. Now let's go to the MBS markets. You can see that this week, not been a great week. And the reason why we had kind of a bad day on Tuesday, Monday was a holiday, so that's not reflected on here. We peaked last week when we had the CPI report, but then Tuesday came and Waller came out and said he's a Fed member and talked about the economy and what things were doing. And he said that, yeah, while inflation looks to be doing better, I'm in no rush to do any cuts. And that kind of everybody kind of took a step back from that. So that was different rhetoric from what we had heard earlier in the week, unfortunately. So that's what drove the MBS market down and interest rates higher. So that's where we're at for the week. If you have any questions, please feel free to reach out to me. I do appreciate when you like and share my videos. Otherwise, have a great weekend. I will see you next week.